Hello, everyone. Good morning. Welcome to another episode of Disruption Talks. Before I introduce my guest today, I'd like you to think about how many times per day do you use your credit card to make payments, and think about paying for bills, going for dinner with friends, getting your groceries, getting that morning takeaway coffee. And if I log into my account now, I'll probably see something in between maybe 5 to 10 transactions daily on average. And there is no doubt that technology made it extremely easy and convenient to make transactions without the hassle of carrying cash. But unfortunately, we're still a long way from a cashless society. And that is a big problem because while we move towards cashless payments, the shift that was accelerated massively by the COVID-19 pandemic, we marginalize the poor who stand no chance to access basic financial services. And this is where fintechs come into play, disrupting very complex traditional banking systems and giving the end consumers opportunities to build stable financial future. And SnapScan is one of those companies. They bridge the gap between cash and contactless payments. They brought one of the first mobile payment apps in South Africa that's changed the way people pay and get paid. And it's as simple as scanning a QR code. It's a pleasure to invite Chris Zietsman, the CEO of SnapScan. And we will speak today about removing those barriers and how SnapScan provides an innovative, frictionless payment solution available to everyone. Hello, Chris. How are you doing today?
Hi everyone. I'm doing very well. It's a sunny Cape Town day, and so I've got no complaints other than the fact that I'm at office and not at the beach.
Yeah, after work, we have to do our duties. So before we get into the topics, the key topics of our discussion today, I'd like you to tell me a little bit about your journey at SnapScan. You started as a financial officer. After 6 years, you moved to the role of CEO. So what was the journey?
Yeah, so I'm a chartered accountant by trade. I suppose I went and studied accounting because when I was at school, that was kind of almost like what devs are now. Accountants were in South Africa at that point, and so my parents were going to become an accountant or a lawyer or a doctor, and I didn't like biology. I didn't like long texts, so I went for accounting and I studied to be a chartered accountant. Worked in very wholesaler-based companies, and then moved to SnapScan in about 2016 towards the start of that year. Acted as financial officer for about 2.5 years, and then moved into the CEO role.
Okay.
So I've been at SnapScan for about 6 years in total, going on 7 at this stage.
So that's 6 years being a CEO, and then.
2.5 years of CFO and 3.5 of being CEO.
Okay. And what are the biggest missions for you now as a CEO of SnapScan?
Keeping a tab on where mobile payments is headed. You know, we were first in South Africa, at least in terms of mobile payments. We generated a lot of traction at that point, and over the past few years, there's been so many new entrants into the space. Not necessarily just on QR channels, but more generally off-card rail type payment solutions. And there's just so many different options to pay in the South African space at this stage. I think my mission at this point is probably to best position our company going forward and pick those really good opportunities for us where we can differentiate the client experience and maintain that like little moat that we have around our product. But then also understanding what we have to do in order to better serve our merchants, and understanding with our product teams what those needs and requirements are, speccing them and putting them onto a roadmap and building them out and releasing them to merchants and to consumers.
And I do believe that because probably not all of our listeners are familiar with SnapScan, I probably know the app inside out. I think I was one of the first testers of wallet feature. I was showing that to my South African friends who had no idea it existed. But yeah, because our listeners might not be that familiar with what SnapScan is, could you explain a bit like what do you offer? What's the value? What are the features?
Sure. So we essentially service two customer bases. And so we've got like a double-sided marketplace play. And so what we offer for businesses and particularly small to medium-sized businesses is the ability to accept card payments, but without having to invest in expensive payment hardware. So you don't need to buy a card machine. All you need is to register for a SnapScan merchant account. You can do that remotely. And then once you've registered, you can generate QR codes, generate pay links, so you can send a link to people that want to pay you. And those individuals can then pay with SnapScan by either clicking your link or scanning your QR code, and then being able to enter an amount and authorize that payment. And the way in which the consumer does that is by downloading the SnapScan consumer application, loading a card into it, which is any Visa or MasterCard or Diners card. And you can then essentially do as many payments as you want to by scanning a trusted merchant QR code and authenticating it on your mobile device.
And who are your competitors? Because I feel like this is a very crowded ecosystems. And recently, I think Apple Pay came into South Africa as well. So who are your competitors? How you differentiate the solution against them?
Yeah, I think that's one of the biggest challenges is just because we service merchant and consumer, we have competitors on both sides. And so Apple Pay is perhaps not a competitor from a merchant proposition, but certainly from a consumer proposition, it is a threat that we're very well aware of. And we might be fintech and we're nimble, but Apple is Apple, and they have more money than there is money in the world, I suppose. So on a consumer side, I think the biggest competitors that we face internationally are the NFC type native payment applications on Google or Android and Apple. And on the merchant side, I think that's where there's a lot of companies in South Africa that are vying for leadership within the merchant payment acceptance space. And so one of our competitors, but people that we also have a very good relationship, are Zapper. So they also are very much a QR-based mobile payments company in South Africa that also operate on the same basis that we do by tokenizing and being able to process repeat payments on your card. And then there's a number of MPOSs in South Africa, like Yoko, iKhokha, there's SureSwipe, and a number of new entrants joining sporadically. And so these are companies that really want to leverage the fact that NFC technology on phones are becoming more prominent and more pervasive. And so these companies, seek to probably take some volumes away from QR codes and bring them onto their payment devices. But these companies all have very different value propositions. We enter a very low barrier to entry, very low costs, no monthly fees. Whereas as soon as you put down hardware, there are costs that are associated to that kind of proposition.
And when we speak about the challenges, we have one question from the audience. Radek is asking, what are the biggest challenges with fraud detection?
There are many. There are many challenges. I think the way in which we've probably gotten to the point where we can go to sleep at night and leave the system and wake up the next morning without having lost a lot of money to fraud is that we've built some very smart limits. And so once a consumer or a merchant start hitting limits or are loading 3 to 4 new cards sporadically, or they fail to authenticate the card load with their bank, we tend to remove those users until our operations team can have a look at them. So it's about finding a kind of a profile of actions and indicators that indicate fraudulent type transactions, and that's where we just block, investigate, and then only allow them to operate on the platform any further. But generally, we've got absolutely no fraud. So we get minor chargebacks on a monthly basis, but it's not even like R1,000.
Okay, so it doesn't really happen to you often.
Luckily not. We block those transactions.
And let's go back to the challenges, like differentiating your company against those competitors. So how do you how would you differentiate SnapScan in that very crowded space? Like, do you market certain type of customers? Do you try to fight those big players, or do you like play along with them?
I think it's a combination of all three. So it's an interesting time as we're kind of tapering to this post-COVID world, where a lot of companies have advanced their roadmaps incredibly fast, and that's been either through acquisitions or just massive investment into resources that can build out their capabilities in a very short period of time. But with that has also come global expansion for incumbent fintechs. So Apple Pay, I think, was not something that I would have expected to happen in South Africa in the year 2021 had it not been for COVID and the real requirement and need for banks in South Africa to offer that kind of payment experience to their consumers. And so at SnapScan, we always take a look at whether we are solving a customer problem. And if we believe we're solving a customer problem and we're doing it in a unique way, we believe that we can compete within that segment or within that use case. And so if you consider, payments at Woolworths or Pick n Pay or ShopRite, which are big retailers that have multi-lanes, and the use case is really that the consumer in that experience really just want to get like their groceries in a bag, and they want to pay and they want to leave. And so it's something, as an example, that we've gone through and thought about quite hard as to whether QR code acceptance within that environment is relevant, or whether NFC payments will win there ultimately, just because it's a quicker experience and you don't have to scan a QR code. And there's a POS terminal that already has the ability to accept card payments. And so we assess those kind of use cases, consider whether we are relevant, and just never try to force relevance where we don't believe our solution is right. And I think that's how we've always operated and survived for quite a long period with significantly less resources and people than our competitors. And the way in which we grow on our consumer side is by having a good, reliable product. And so we've, I think, built a brand not only by marketing, but by just very good word of mouth. And so people like yourself saying, well, I live in Cape Town, I use my SnapScan app regularly to make payments, and friends tell each other about the solution. And I think that vetting and word of mouth is something that's been really good to us. And you can only get that, I think, when you have a good product that people trust.
True. So you started the company within the Standard Bank ecosystem, which is like one of the biggest South African banks. What were the benefits of doing that at the time instead of launching on your own?
I don't think we would have been able to launch SnapScan without significant bank sponsorship at the time. So we launched in 2014 in partnership with Standard Bank. We did a few POCs in 2013, but ultimately, you can imagine that in a world where the country was really gearing up to accept card payments as a physical payment method, through plastic. This was something that was very foreign and alien to the payment industry. And you're sitting with a payment industry of people that have perhaps been around for 20 years, and they were around when people were still paying with checks in South Africa. And as you know, that's just not a thing anymore. We're now highly digital, but at the point of launch, the digital payment experience or non-cash experience by industry was through physical card. And so there were a lot of questions around the safety around taking card details, storing them remotely, and allowing a consumer to process repeat payments on that stored token. And so launching with a bank gave us a lot of credibility. It gave us the ability to negotiate within industry and for other banks to not block their cards being loaded into SnapScan. And so, launching with the biggest bank on the African continent gave us that credence from day one. And I think did a lot of good and added a lot of value to the mobile payments industry as a whole. And kind of warmed up the payment regulator and other third-party banks to the notion of paying digitally rather than with card.
And do you feel like right now it will also make sense to do it the same way, launch with a bigger player, or the market is already there?
There's benefits to doing it with a big bank, and then there are drawbacks, I think. And so I think
let's speak about the drawbacks.
let's speak about the drawbacks. So banks move very slowly for a reason. They're big behemoths, and there are many people that work within a bank. And so I think banks generally decide on the strategy, and they follow that. And it's very difficult for a bank to deviate from their strategy just because somebody within that bank has a bright idea. So when they're committed to a direction, they are headed in that direction. It doesn't really matter what you do. You're not going to change that direction by being a individual or a company within that ecosystem. So you kind of have to figure out where that bank is going if you're launching with them. And you have to ensure that your product, if you're launching in partnership, solves the problems that their strategy wants to solve. Because if it doesn't, you're not plugged into that system, and you're not going to leverage the distribution that big bank brings, which is the big benefit of working with banks. They've got very big customer bases. They have the ability to process payments from a legislative or a regulatory perspective. They can hold deposits because they are banks. And these are things that fintechs try to do, but oftentimes still have to partner with banks in order to get right. And so if you think about any fintech in the SA space that process card payments, they need a sponsor bank. And what we were able to achieve through an equity investment from Standard Bank into us is that we don't necessarily have a commercial partnership. It's an equity partnership. And so Standard Bank itself as an organization is vested in the success of this business. And I think that's the way in which we bridge that challenge of working with banks, is making the bank a vested party in our success.
And do you think it has changed? Because I believe that the big banks feel the pressure of innovating faster, being more agile. And in the last couple of years, I think that the whole perception and the whole speed of developing, bringing new solutions to the market has changed. So do you see the difference working with the big banks now than it was?
Yeah, I think it's a very fair comment that you've made. It's very to the point and direct and true. The challenge that banks face today is that they have enormous payment capability. If I'm just thinking about fintech and our specific type of industry of processing payments, so they have all the infrastructure to process billions of payments at scale. They have the branches in order to service customers. They have all of these great distribution channels. But what fintechs have done is they've digitized channels that were traditionally analog and physical. And so fintechs don't need bank branches in order to grow. They do things like SEO incredibly well. They research the segment that they want to service, and then they target those merchants or consumers through social media or through Google Ads or whatever. Banks are not that agile in doing that, and that's where I can see as an outsider that regularly sits within banks, and that doesn't just include Standard Bank, that banks are trying to change the way that they think about innovation. And so every single bank that you speak to in South Africa at the moment are going, okay, we need the right products around payments, because we can do payments, but banks realize they don't necessarily have the right products around it. So giving a terminal or a QR code to a merchant is no longer a product. You have to give a digital experience around that payment capability, like a inventory POS or a payment gateway or plugins to WooCommerce and Shopify. So that certainly is something where banks are scrambling, and they are buying up fintechs in the SA space or partnering. You can see that FNB bought Celltel about a year or two ago, and they're launching a bunch of products around that category of services with integrated payments into their base.
And we have two questions from the audience regarding partnering with banks. So one thing is, the first question is that because Standard Bank has branches in more than one country, do you have any plans to expand to neighboring countries? Because as far as I know, SnapScan is only available in South Africa.
Only available in South Africa today. That's correct. We certainly have aspirations to enter the African continent. But I think one of the things that people in Africa understand is that card penetration outside of South Africa isn't that high. If you think about the number of people that have Visa and MasterCard cards. So one of the things that SnapScan has to really do well before we can branch out to other countries is have that non-card payment experience. So we have to really work and optimize the wallet that we've built, so that people can put money into the store of value, and we can process payments at a lower rate or a lower cost to the recipient. And so I think that's one of our key focuses for the coming year, is to understand how we can move off card rails and how we can branch out and use the distribution that Standard Bank have on the African continent to roll the solution out more broadly.
Thank you. And so how being, it's another question from Tomek, how being a part of Standard Bank affects your ability to cooperate with other banks and legacy players?
I think Standard Bank have a very open view of this. So as an organization, Standard Bank and Sim Shabalala has made this very clear in a number of his CEO addresses to shareholders and to industry, is that Standard Bank has the strategic intent to become a platform business. So Standard Bank, as one of the biggest banks in Africa, are saying that it wants to work with fintech incumbents, new players that are joining the market, even with competitors, if it makes sense. And so having that kind of executive sponsorship from Standard Bank means that we certainly have the autonomy to work with other banks. The question is always around whether those banks want to work with us because we are still owned by Standard Bank, and that really depends on the management and the vision of that specific bank as to whether they think it's worth partnering with us or working with us.
Mm-hmm. And do you think you will branch out and become independent one day?
Um, so it's a philosophical question. I think the business in the next few years will probably um, have to position itself that it can take strategic equity from partners. And so, if you think about any other fintech in SA, that's what they're able to do, right? They've got an open cap table where they can go to other bigger players that bring significant distribution, and they can bring them on as shareholders. And so it's something that we're always assessing and trying to figure out along with Standard Bank, because we obviously have to maximize shareholder value. But I think as we move into other territories in the coming years, we'll probably have a number of companies that have different ownership structures and different levels of autonomy. And we'll just have to figure out what is optimal for servicing that region, and getting the best capital allocation into rolling our solution out.
Mm-hmm. And I want to move to the topic of creating more, like bringing more financial inclusion to the country. South Africa and in general African countries are still very cash based. A lot of transactions happens with cash. So what's the role of SnapScan in digitalizing the money for the end customers?
Yeah, I think if we think of some of the best use cases where I think SnapScan has been able to displace cash,
Mm-hmm.
it's probably around weekend markets and parking. And so in South Africa, more of the shopping malls and street parking solutions are leaning on QR codes or mobile payments to get paid. And those were traditionally cash payments. I think the problem with that is that those payments are generally made by consumers who are generally affluent, because they're going to a shopping mall or they're parking, so they've got a car, right? And so we certainly have been able to displace cash, but as an industry, and this is not even just SnapScan, we haven't been able to displace cash within the unbanked space, or the generally poorer regions of South Africa. And I think that's one of the things that industry in South Africa have to really work hard at solving for. And there's a number of reasons why we haven't displaced cash in Africa or within your less formal trading environments. And one of them is that cash itself is a very good technology. It's been around for thousands of years. It's perhaps a controversial statement, but it's been around for thousands of years. It's you don't have to sign up for a merchant account to accept cash. You just pitch up and you can accept it. And so, if we want to really displace cash, three things will have to happen. We will have to reduce the barrier to entry for accepting mobile payments. And this is where industry and regulation comes in. So regulation, from a perspective of the Payments Association and the Banking Association of South Africa, have to realize that certain payments below a certain threshold must be allowed without having to go and take an ID copy of an individual that's receiving that cash. And so regulation still marginalizes a very big component, or a big portion of the segment within South Africa and Africa generally, because the same problems exist in Nigeria. Secondly, we will have to get the right payment rails that don't necessarily go on card. So we can cut out the old Visa and MasterCard that take very big chunks of the transaction revenues. And we have to lower the cost, because cash is free. To the recipient and the payer, they pay nothing to accept cash. And so if we can fix the regulation, and make mobile payments as pervasive and acceptable as cash, if we can fix the cost of accepting mobile payments and make that essentially the same cost as cash, then we only have a third problem to solve, and that is to have the right products that can deliver mobile payments between consumers and merchants. And that's the one I think that fintechs, once you solve for the first and the second problem, fintechs will solve the third problem in 3 months. That's the easy bit. So I think I am perhaps a little less optimistic as to the extent to which we've been able to displace cash, but I'm optimistic that we can, if all the stakeholders within the South African environment play together and we look at the problem and we try to solve that without any specific agendas.
And what stops from introducing those regulations? If you think about the African countries.
I think
dig deep into the problem.
How much time do you have? The big okay. The big problem is that there exist real threats of money laundering and terrorist financing and other nefarious actions that occur once you digitize currency. We're seeing that with cryptocurrencies, and that's why some of the country regulators are incredibly skittish around what you can and cannot do in terms of how you can buy crypto. The same type of problems face digital currency. Ironically, the same applies to cash. We just don't know about it, or we don't see it as much because there's no real trace of it. And that's why it's going to be important once countries catch on to this notion of allowing digital payments without compliance burden to those that want to accept digital payments. It's going to be important for countries to say, well, under a certain limit, you don't have to go and give a full KYC process and a full FICA process. Nobody has to go and check that your shop is in fact a shop or not some business that's trying to launder money. And I think we can achieve that by just saying, well, under a certain threshold, if you process X dollars a year or a month, you don't have to go through a compliance process. Once you exceed that threshold, then you must. And that's fine. Then, we retroactively FICA and KYC those individuals. So I think that's the kind of mind shift change that the various industry leaders will have to adopt in order to displace cash.
And what would be the time frame, do you think? Will it happen in the next 5 years, 10 years?
I think it's imminent, because something that is entirely unregulated and that has gotten incredible traction globally, like cryptocurrency, can start doing this. And so, again, a philosophical question, but at some point, cryptocurrency will become a threat to normal currency. And cryptocurrency doesn't necessarily require you to do anything other than register a wallet. In some areas or regions, you have to go through a KYC or a FICA process. But I think within the next 3 years, the countries that seek to keep their currencies relevant will have to think about how they transition cash into digital. So I think it's very imminent, especially given the shift to digital during COVID.
We'll jump to COVID and then how SnapScan was affected in the whole payment industry in a second, but we have one more question from the audience. Have you tried to convince Standard Bank to do a pilot based on direct debit of the account instead of adding a credit card to the wallet, that perhaps integrated with the mobile banking app?
Yeah, we've to be honest, had that conversation with a number of banks. I think that's how you reduce the cost of processing payments to merchants, is coming off card rails. it's certainly something that's available in the market, and many of the banks are building EFT APIs. So the ability to process an EFT direct from a, that's exactly this direct debit. And the technical question is always just the user journey as to how they link their bank account into SnapScan rather than a card. And linking a card is incredibly easy. Linking a bank account is a little bit different because there's no standard authentication method to go and authenticate that I want to do this. So with a card, you just invoke what you call 3D Secure, which is a general standard globally. With an EFT API, that's going to be different for every single bank. And so it's something that we are definitely looking at and considering, but that still requires a bit of unpacking from an experience for the consumer. Because the last thing we want is for people to sign up for SnapScan, try to link their account and fail because the consumer journey was confusing. Because that's generally when you lose a user and they just say, well, this product doesn't work.
Yeah, true. 100% agree. So how was, speaking of COVID, going back to COVID, how South African payment sector was affected? What were the key changes, key trends that you observed within the whole ecosystem?
I think generally speaking, and this is an anecdotal point, it's safe to make the conclusion that digital payments has grown during the pandemic. But you have to look at a lot of data to understand whether it's grown just through e-commerce or whether it's also grown in terms of digital payment acceptance, but within a face-to-face environment. And our data certainly shows that our turnover has grown, so the total processed value has increased dramatically. But the number of merchants that accept payments have decreased, and that's because a number of them have closed their doors. So a number of these SME merchants that really fall within our sweet spot just didn't survive COVID because they're eateries within Cape Town CBD or in Joburg CBD. And during COVID, they couldn't trade for months on end when we had hard lockdowns. And so many of those businesses closed down, but there's been a very big growth in mobile payments for e-commerce. So generating a QR code within a WooCommerce or a Shopify checkout flow, scanning and paying with SnapScan has seen significant growth. And so that's been encouraging. But I do have a real soft spot and some concern for SMEs that traded face-to-face that weren't able to survive COVID as a business.
But if you go a little bit deeper into what were the areas that grew in terms of what kind of shops online, on site, where were any trends, consumer trends, that area? What were the trends?
The consumer trends were very much towards consumer goods purchased online. So if you think about clothing, that's a segment that grew significantly on our end. And just our consumers that buy through very big retail online stores like One Day Only, like Yappie Chef. And these are all companies that sell anything from socks to cookery and things for your kitchen. So the buying power of the South African consumer that uses SnapScan certainly still exists. So they still want to spend money. They have spent their money online and buying things that are nice and that suit their homes because they're spending more time at home. If you're spending a lot of time in your kitchen because you're working from home now, you're going to start buying stuff from Yappie Chef that's crockery and pots and the like. And so that's certainly a trend that we've seen, moving into digital. And the brick and mortar environment or face-to-face payment environment has very much been unpredictable because people are not necessarily keen to open a restaurant in the middle of COVID because it just simply isn't going to survive. So we're seeing bigger ticket items for online purchases because generally you're checking out a basket of between 500 and 10,000 rand. And in the face-to-face environment, many of the merchants that have always been around and are almost kind of part of the cultural thread of cities have remained because they have very loyal customers. But those that kind of were starting up and starting out just before COVID, certainly from our data, weren't necessarily able to make it through and close their doors, which means that merchant goes dormant and you no longer have a volume flowing through them.
And have you noticed like a significant spike in terms of the customer base on the user perspective during COVID? So were there more people joining SnapScan when they could only do shopping online?
Yeah, so we saw two trends. So more people joined SnapScan, but then we also started seeing more payments from banking applications that are interoperable with our QR codes. So a number of banking apps in SA can actually scan directly from their bank app, and so the consumer doesn't have to have SnapScan, but it can still scan a SnapScan QR code and make that payment. So we saw kind of both in unison. The interoperable payments certainly had a spike, but the use of SnapScan also increased. And we certainly have to think as a company about how we keep that adoption trajectory, because we're not going to have the kind of adoption that SnapScan had over the past 18 months every single year, because the pandemic really helped us in that regard. So building out features like the wallet are really important for us because we need to grow more value and more utility to SnapScan users.
And can you describe a little bit more about the wallet option, because it's fairly new feature?
Yeah, so we launched it only a couple of months ago, and it really follows the traditional payments for person-to-person logic. So you can download SnapScan, you can send money to your friends, and you can do all of that from card rails. So you can charge your own card, and I can send it to Nat's wallet on SnapScan. She can then pay with that store of value that sits within her wallet. You could send that money on to other friends, so it's totally liquid, or you can choose to cash it out to your bank account. And so if you wanted it back into your actual main transactional account, you can do that too. And we've seen some really good and encouraging growth of people paying one another. And so it's always been one of our biggest things that we wanted to achieve is not just connect consumer to merchant, but also connect consumers to consumers, because that gives that flywheel growth a different kind of power, because now consumers are driving consumer adoption, whereas in the past you only had consumers driving merchant adoption and merchants driving consumer adoption. And so in future, for example, we might even have merchant wallets and where merchants can pay one another too, because generally that there's a trend of convergence of consumers and merchants.
And what was the trigger to start with the wallet feature? Did you receive feedback from customers?
Yeah, so we've received a lot of good feedback. I think one of the challenges is that in registering for the wallet, we do a number of validations in terms of regulation. So we have to check your Home Affairs account, for example. So if you wanted to cash out your money, we have to go through a process of smart scanning your ID document, sending that to the Department of Home Affairs, and sometimes they just don't have the user's data, which is very concerning. But unfortunately, we then can't register the user. So that's certainly something that we're trying to improve on.
But I want to ask, what was the trigger to actually build the wallet feature? did you have, was it like basically from the very beginning in the roadmap that you eventually build that feature, or you would hear users actually asking for it? That would be like a nice thing to have within SnapScan.
Yeah, so it certainly came through user feedback, and so the ease of payment, I think, is something that users really appreciated from day one. But they wanted that same ease of payment when paying their friends, and so I think that's really the reason why that became a very popular request from consumers, and why we prioritized it during COVID, because we may as well do something bold and new during that period.
And what are the next things on the roadmap for SnapScan?
We've got a big focus on building out a more digitally friendly proposition to our merchants, and so we've built out a merchant app, allows you to generate dynamic QR codes, and that's in beta at the moment. And so we've got about 900 merchants that are using that. We're also trying to through that process remove the onerous requirement of sending an SMS for payment notification, rather moving merchants over to receiving a push notification. And throughout the next couple of quarters, we'll be updating the capabilities within that merchant application. So our payment links can now be sent straight from the merchant app, and you can send a payment request to any of your consumers directly, and that consumer can then pay either by SnapScan, or can elect to pay with a payment gateway and enter their card details if they so wish. And so having a digital experience for consumers has always been great, but our experience for QR code has always been very analog on a merchant base, and so we're trying to convert that to an app in the next year.
And speaking of bringing new features to the market, what's your strategy of building, validating new ideas? How do you bring new features, new products into SnapScan?
So a bit of cheating, I suppose. So we obviously take a very pragmatic approach of looking at what is happening in the world. You don't always have to reinvent the wheel. The wheel is round and it exists. But we have to validate whether the things that we want to build is applicable to South Africa. And so there's a beta group of merchants and consumers that we often do surveys with, and so they give us some really good feedback as to what they want from the product. We then consider that in terms of what would make money and be profitable long term, and then assess what happens elsewhere in the world and what our competitors are doing. And so there's this very big blend of taking all of those variables and coming up with a roadmap to say, well, this is what we need to build.
And what's the time span of validating those ideas? How long would the testing go?
I think it really depends as to whether it's a feature or a product. And so feature releases are generally quite quick, and we'll just iterate on those feature releases as we get feedback from the market. But feature releases are generally based on market feedback anyways. So in that instance, you kind of know that you're doing the right thing. From a product perspective, much longer. So we try to release a beta and kind of do 3 to 4 months just in that process and get constant merchant feedback. But then it's a process of analyzing the backlog and looking at the resources that we have available, because we're not necessarily a VC funded company, so we don't have 100 developers just kind of waiting on the sidelines for work. So it's a process of validating during a beta and then ensuring that we go and build the next feature set thereafter.
And do you have any sort of like factors that you choose, you based on your decision on how you prioritize this idea? So let's say you have a backlog of different features that you potentially can build based on customer feedback, based on like what competitors are doing. So how do you decide this is what we're gonna do next, and this is what we're gonna do further? Do you have like a specific checklist to prioritize?
Yeah, I think the process was before COVID probably a bit more scientific.
Mm-hmm.
Over the past couple of quarters, it's been a lot more of a, a quicker to market approach. So you kind of have to make decisions very quickly because else you're stagnating and your competitors
Mm-hmm.
are advancing. So we generally think of product as being one of three things. So there's foundational, then there is scale, and then there's aspirational. And so we've spent a lot of time over the couple of quarters that have passed to build out foundational and scaling capabilities. So one of the problems that many fintechs in South Africa face is that you have to comply with regulation and legislation, which means that onboarding a merchant is a onerous process. You have to FICA them, you have to get a bunch of documents.
Mm-hmm.
And so we look at that process as a scaling function, and you can't start building aspirational product that, like a merchant application that has a bunch of bells and whistles until your product is scalable and people can actually reach you. So I think we look at all of the things that we want to build and that we've gotten feedback from our merchants and consumers around what they want, put them in those baskets of foundational, scaling, and aspirational, and then kind of try to stack them and understand whether we can actually launch an aspirational feature before having to make a scalable development live. So we try to stagger them in a chronological order that will most likely have the biggest impact.
Mm-hmm. As we're slowly running out of time, I will have maybe 2 or 3 more questions. I want to ask you about your predictions, what's going to happen in 2022 in terms of payment sector, how it will evolve, what will be the biggest trends, the biggest advancements within the whole sector.
In which year? Next year?
Next year, 2022, yeah.
Okay. Well, I think it's going to be an acceleration of what's happening at this stage.
Mm-hmm.
It certainly is going to be a process of more soft POS, so the ability to tap your card onto an Android phone and accept payments through that channel. There's very few cards being issued, plastic cards that aren't
Mm-hmm.
NFC enabled, and so I think there's going to be that very big push. If you think about the acquisitions that Visa have made and that Apple have made of companies that specialize in just that, it certainly is something that that's going to become more prevalent in the next year. I don't think any business will be able to throw away their card machines just quite yet. But for a small business that just wants to accept card payments and don't want to necessarily invest in new payment hardware, I think that's
Mm-hmm.
a fantastic solution when coupled with QR codes. I think you can probably accept 70% of the payments that you would normally through a card terminal just through QR code and with
Mm-hmm.
tap on phone. And then I think more banks are going to adopt Apple Pay and sign those bilaterals to embed the Apple Pay experience for their consumers. And that certainly is going to be something that's going to win in the retail space, at least. Not necessarily small to medium enterprise businesses, but in a quick checkout where you really just want to tap your phone and leave. I think that's going to be a real game changer. And I think quite generally, there's just going to be a massive convergence. The
Mm-hmm.
payment space used to be very big, and all of a sudden, the payment space is becoming very crowded and everyone is vying for each other's lunch. And so there's going to be this process of joint ventures. And I think a lot of companies are going to just start acquiring components that will bring new features to their main product. and that will probably advance for the next 2 years as big payment companies just try to gobble up more and more of the payment infrastructure in their markets.
And do you see SnapScan being one of those ventures? Do you see any potential mergers with other players?
I think any fintech, so any fintech in South Africa at this point are being approached. I think I don't think we are unique in that sense, and it's for various reasons. It might be incumbent banks that need better solutions, or traditional financial service providers that just need an agile team that think about product rather than payment, because we consume payments. We run on traditional card rails, but we try to build a superior product with a good user experience around that. So SnapScan might be one, but I'm also cognizant that any other fintech in SA, because we have some really good fintechs, probably are some of the possible targets for acquisition as well.
Okay, I have one last question. Is there one thing, maybe two things that you would have done differently at the beginning of your journey as a CEO at SnapScan, having the knowledge right now? Would you change anything?
I think there's a few things I would change, but I think perhaps one of the lessons that I've learned very painfully is that that decision making is hard, especially when you're playing against very big companies and you have a very dedicated and competent team that are very minimally resourced, and you've got to kind of like fight and punch above your weight class. And so there's so many factors that weigh in on making a decision as to what the strategic direction of the company should be, what those things are on the roadmap that are prioritized. And perhaps one of the things that I wish I knew when I started out was that there are always going to be big decisions and small decisions. And so if you can make the first decision not to necessarily elect an outcome, but you can just decide whether it's a small decision or a big decision, you can clear up a lot of your own headspace. And so oftentimes I think what new leaders do is they treat every single decision as a big one. And that becomes really emotionally taxing. If you consider that you've got to make 50 decisions a day, if there are 50 big ones, you're going to be really tired at the end of the day. But if you can say, well, look, 40 of them are really minors, and I'm just going to make them and understand that I can change those decisions if I have to in future, and then free up your headspace and just focus on those 10 decisions that are going to commit the company in a trajectory that you can't reverse.
So there's definitely more peace of mind at this stage of your journey at SnapScan.
I hope so.
Thank you so much, Chris. That was very insightful conversation. Yeah, we're almost reaching 11. We have another episode next week. So I invite everyone who's still watching us to join next week. We'll be there. Probably I won't be there, but there's going to be a different host. And thank you, Chris. Have a lovely day. And I'll see you soon.
Thank you for having me. Cheers, everyone.